Euro dollar. So the euro has been locked in a consolidation in recent trade, a choppy consolidation, after the market had broken above the neckline of a double bottom formation that potentially projects upside towards the February peak at 115.35. At the moment, we're going to need to see if the market can hold above the neckline to keep that pressure on the top side towards the 15.35 objective, or if the market breaks back below the neckline, it will likely end the possibility for further upside towards 15.35 and open the door for a more immediate bearish resumption back down towards that critical 12-year low at 104.62 from the 13th of March. Sterling dollar. So cable has been very well bid in recent trade, with the market rallying all the way up above 155 and just shy of the 2015 high at 155.52. At this point, though, the downtrend still remains intact, and a break above 55.52 would be required to force a shift in the structure. Inability to do so will keep the pressure on the downside, with a break back below the recent low that we saw from last Friday at 153.55 to accelerate declines back down towards key short-term support at 50.90. Dollar yen. So dollar yen remains locked in its consolidation, with the market roughly defined between 122 above and 118 below. A break above the 7-year high at 122.03 from earlier this year would open the door for a bullish continuation towards the 125-130 area, while back below 118 would open the door for a deeper correction towards 115.55. That's the December low. But ultimately, a break back below that 115.55 December low would be required to force a shift in the structure, with anything in between seen as bullish consolidation. Euro Swiss. So Euro Swiss has seen some setbacks from the 108.15 February recovery high all the way down to 102.35 in late April. But at this point, the market is attempting another recovery, with a higher low now sought out above 102.35 in favor of the next upside extension beyond recent highs that we saw at around 105.25 and back towards 108.15. Really, only back below 102.35 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie is locked within a well-defined downtrend, with the market having been trading in a consolidation over the past several weeks. At this point, a lower top is now sought out at 80.75, that high that we saw the other week on the 29th of April, in favor of the next downside extension back below the recent multi-year low from earlier this year at 75.60. Dollar CAD. So dollar CAD remains locked within a well-defined uptrend, and the recent pullback seemed to have found support by a measured move in the 1940 area, and a higher low is now favored ahead of the next major upside extension back towards the recent highs at 28.35 and towards the 2009 peak at 130.65 further up. Really, only a close below 119 would delay the bullish outlook for dollar CAD. Kiwi dollar. So Kiwi is locked within a well-defined downtrend, with the market now looking to put in the next medium-term lower top at 77.44 ahead of a bearish resumption back below the recent multi-year low at 71.76 from the 3rd of February. A break below 71.76 would open the next major downside extension towards the 65 area, while ultimately only back above 77.44 at this point would compromise the bearish outlook. SPX 500. So the S&P 500 remains locked within a very well-defined uptrend defined over the past several years, although the market is now starting to find some really solid resistance on rallies above 2100, with recent highs from February at 2120 only slightly being broken to 2126 ahead of the latest minor pullback. At this point, however, a break below 2040, the low that we saw from the 11th of March, would be required to take the pressure off the top side and suggest that a major top is in place. Until then, expect more pressure to remain on the top side. Gold. So gold has been under pressure in recent sessions, though the market continues to be very well supported on dips into the 1170 area. At this point, a break back below 1170 would be required to put the official pressure back on the downside and for a focus on a retest of the 2014 low at 1131. However, inability to take out 1170 followed by a pushback above 1225 would confirm the possibility for a longer-term base and open the door for fresh upside back towards 1300.